I'm not going to repeat these horrible, depressing studies, about how many people don't make it. Moving on. Okay, I'm going to talk about a friend that I've had for 25 years. Actually, he's been trading a little bit longer than that. I've known him for 20 years. And he started off on a energy desk. So you have lots of firms that specialize in commodities. It could be the grains. It could be energy futures like nat gas and crude oil. A lot of people 30 years ago that started off trading before the internet and before the software that we have nowadays usually started with a brokerage firm like a Merrill Lynch type of firm as a broker, stockbroker, 40 years ago, or on an institutional desk, the Goldman Sachs cliche type of thing, or on a commercial type of firm that did the cash management. So he started off with a firm that traded the cash markets and the energies. Very bright person, very detail oriented. We have talked probably every month for the last 20 years, and it's not necessarily the IQ that's going to make or break a trader, but this fellow has a very high IQ. He's excellent at risk management, detail oriented, all the ingredients are there. So at this point, he had a very successful fund with a partner that he ran for just a couple years, enough to make a lot of money. And so he's financially secure and he doesn't have to trade. That's a huge plus. On the other hand, he now has a blended family with 5 young kids under the age of 12, a lot of distractions, huge minus, and he's still trying to do this other little business on the side of helping out with this one fund. So you've got pluses and minuses, and he has 2 trading accounts. That's why I thought this would be a good example to start off with. One makes money consistently, and the other one just does not. And he can't build it up, and he's very frustrated. And he'll tell me, it's like magic. This one account, if I pull $5,000 or $6,000 out of it, it just makes it back. So let's see what he's doing here. So his first account, that is the magic account, where he's not even really trying, it's doing just one strategy, and that's with stock options. And it's a holding period of 2 to 5 days. So we're not necessarily in front of the screens watching all the ticks or the intraday charts. Here's a setup. We go in, we buy our call spreads or our straddles or the outright calls. We hold them for a couple days. There is a risk, point where perhaps if the initial trade loses 50%, he'll close it out.